We knew that 2025 was going to be a bumpy ride, but things are changing and they are changing quickly. So we decided to call this fireside chat, and we're going to try and look past the noise and perhaps attempt to answer some of the what if questions that's been popping up in the back of people's minds. And for this discussion, I'm joined by Donald McKay. He is the CEO of XA Global Trading Advisors and ETM Analytics Director, George Glenos. Now, gentlemen, we know that the US has been riding the gravy train linked to what we call US exceptionalism, that's due to them being on top of the economic food chain for a very long time. And if we look back at history, we know superpowers rise and fall. I mean, the British took over from the Dutch, the US took over from the British. And over the past couple of weeks, we've seen the US dollar, first of all, increasingly come under pressure. We've seen US Treasury yields shoot up as investors starting almost moving out and shunning what we would traditionally refer to as safe haven assets. And my first question to throw at you is, what if this continues? Is this possibly the beginning of the end of not only US exceptionalism, but perhaps safe haven assets as we would traditionally know them? George, you can answer first.
Yeah, I mean, thanks, Ilse Marie, and great to be with you guys. So it's interesting that you frame it that way, because you do go through these different epochs, and as you shift through these different epochs, there's catalysts that kind of take a particular regime to heights, call it, and once there's something that tends to unfold. There's a series of events that tend to unfold that result in its unwind over time. And I think we've seen a lot of that unfolding in the US and the dollar, and perhaps it's reached its zenith. And I think its zenith was perhaps reached during the pandemic. And the reason why I say that was because the US was able to do things through the pandemic that nobody else was able to do. And they were able to do that because they had the privilege of having the US dollar as their currency, and the US dollar, as we know, has become the world's reserve currency. And getting yourself to a position where that is the case.
I apologize. Oops.
No worries.
That I did not anticipate. Turn my phone off and I've left it on my computer. My apologies.
No worries.
While you're doing that, let me turn mine on.
One moment. We'll take a moment.
Do you want to start again, Ilse Marie, or should I just carry on?
I think it's fine.
Okay. So as indicated, I think we reached the peak during COVID, during the pandemic, when we understood that the US was capable of implementing policies and taking action that most other countries around the world couldn't. And they did that because they had the dollar, which was their reserve currency. And as a result of that, were able to get away with some sins, if you like, economic sins, if you like, that no other country could get away with. And one of those was very aggressively printing up their currency to bail out their government, and to allow that government to effectively bail out households and businesses and do all sorts of clever things. Now, one could argue that they avoided a global depression by doing that because they kept asset prices buoyant. But at the other end of the scale, one can also argue that they induced a tremendous amount of distortion throughout the financial markets. And that's kind of where we are we're in that post-pandemic era now, where people are looking at things a little differently. And I think there was a lot that was set in motion during the pandemic, which pushed the US closer to the point where something had to be done. As it turns out, Donald Trump has come in at roughly that point in time, and he has identified a problem in the US, and that problem was this huge buildup of debt and an unsustainable fiscal trajectory that they couldn't continue down that path. Even the US would find that difficult to do. Now, I'm not saying that they would fall over in the next year or two. It would probably still take them a decade plus to get that right. But they did identify that things needed to change. And that's one of the catalysts that I think prompted Trump to push as hard as he's pushed down the road of trying to fix the fiscal position that the US is in. And in so doing, he's gone about it in a fairly destructive way, and that destructive way is the imposition of tariffs, which obviously has quite negative growth implications the world over. He's framing it as though it's going to raise revenue to fund a lot of the tax breaks that he wants to implement and to shrink the size of government, but that too is not going to be easily done, and the numbers don't quite add up either. So when you look at it from that perspective, you now start to think about the US and the dollar in a whole different light, because the way that they've gone about it is almost undermining the very thing that got them to the position of such privilege in the first place. And so therein lies the interesting debate, I guess, that we can have today. And I'd be interested to hear in Donald's views on all of this, because quite frankly, it really is centered around global trade. It's centered around whether or not the US has the capacity, because of its privilege, to be able to pull off tariffs without completely destroying so many of the supply chains that are interlinked with the US, given its position of such an enormous global player in trade.
Donald, George and I mentioned that, Trump and his actions have been quite destructive. And, it's not just the US dollar that's taking a beating or coming under pressure and the yields, but, a lot of it's got to do with good faith in the US as being a solid partner and an ally, whether that's through PEPFAR, whether that's through military assistance. I mean, do you think us seeing investors shunning or turning out and turning away from the safe haven assets, US dollars, treasury yields, is that reflective more of fundamental concerns, or is it perhaps this destruction in good faith from the US that's happening that's driving this?
Yeah, so I think the US has proven itself to be an unreliable partner, and not just in trade, but particularly in trade at the moment. So, in Trump's first term, he got rid of NAFTA. He said it was the worst agreement ever negotiated. He then replaced it with the USMCA. And then in his first week in office, he breached the terms of his own agreement. I'm not sure if he forgot that he'd actually negotiated it. But the effect of this is that an agreement with the US doesn't appear to be worth terribly much. If the US wants to squeeze you for more, then they can do so. And so in that world, we kind of, I think you can split the globe into two. There are big economies which can duke it out, and then there are all the rest of us which really can't. And so in this kind of mob boss way of interacting with the rest of the world, the US is surely unappealing to park your money in. Today, there's conversations going around of saying, well, we're not really that keen on the 10-year treasuries anymore. Plus, nobody's wanting to buy them. People want shorter-term notes. We're looking at the century bonds. So you come in, and 100 years later, we'll settle your debt. So, in some ways, this is not really the message you kind of want to get from the world's banker. And I think from that perspective, I certainly don't think the dollar kind of collapses as the reserve currency immediately, but I think we're on a path where the dollar as a reserve currency becomes less and less appealing. But this has consequences outside of trade and finance. So, for example, if you look at what is happening within NATO, everybody's kind of arming themselves to their teeth. Even the Germans have kind of said, okay, we're going to borrow like we're Argentinians now. And so they're building up weapons stores. Poland is saying we have to get our own nukes if the US is not going to step in and have that role. And so what I think the US has done is they're isolating themselves from the world. And that has, I think, quite profound consequences for the world economy. So to put a number to this, the US accounts for about a quarter of the world's GDP, but it accounts for about 17% of global trade. So put that differently, about 83% of global trade does not involve the US. And I think we're going to see the world focusing increasingly on that 83%. The problem is global trade depends on the US protecting the shipping lanes. And we've seen with the Houthis firing their rockets at ships, the Chinese are not stepping up into that role. They're kind of going, please don't shoot our ships, but fair game for anyone else. And so my concern is that on the one hand, we've had the US under Biden kick Russia off of SWIFT. I mean, whether you agree with it or not, I don't think anybody ever thought that kind of thing could happen. Now it's happened. The dollar is less appealing than it used to be. I don't think we've got an obvious replacement for that, but nevertheless, it's less trustworthy. And of course, all of these things are really dependent on trust. I mean, all global trade is ultimately dependent on the fact that when I have dollars, those dollars are worth something, that they're not going to depreciate because of some weird policy choice in the US that makes no sense at all. And I think we're in a position now, we saw with Trump's big tariffs a week ago, that the Japanese, for example, did not pile into US treasuries, but actually sold off substantial chunks of their holdings. And so that is telling me that the faith is slowly weakening. I think we're going to see a reorganization. I just don't know how that looks or how long it takes.
But is that a bad thing? Is reorganization of the economic structure, the trade, is that necessarily a bad thing? Because I understand that there are going to be consequences. For example, if AGOA is completely wiped off the floor, South Africa is going to have definite consequences on the ground. But you have situations where Europe, like you mentioned, is turning and looking towards themselves for security and not just relying on the big brother. And I'm not sure that is necessarily a bad thing. So, George, I think my question is was this Trump shakeup perhaps necessary for the global system?
Well, I mean, I tend to look at these things quite pragmatically, and people are going to do what they do, and Trump will do what he does, and he can be very disruptive and shift the goalposts around quite a lot. But the reality was that China, through its BRICS Plus alliance, was always looking to try and create some sort of a bipolar world where some of the economic powers got split away from just America. And in fact, when you have a look at your GDP growth as a percent of total global growth, you find that G7 is steadily declining and BRICS Plus is steadily increasing. And the last time I checked my chart on that, they were due to cross over somewhere around 2027, 2028. That's around the corner, where your BRICS Plus effectively has a slight dominance, if you like, on the way that global GDP functions and the dynamism in it. There's something over and above that which I found really interesting when I visited Dubai last year, and I went on a couple of trips and was very fortunate to sit in strategic meetings at a very senior level in Dubai. And one of the debates that was sparked was the evolution of cryptocurrency and the proliferation of it, but also the way that BRICS Plus might start to focus and create their own currency. Now, here's an interesting thought, and the interesting thought was flighted a couple of times, and not just there. I've heard it elsewhere too. But if you have a look at the makeup of BRICS Plus, and this is more than a conspiratorial theory, you just need to look at the constituents, and you will find that there's two glaringly obvious strains within BRICS Plus, which are very, very powerful. The first is that they've got most of the world's oil production tied up. The second is that they've also been accumulating gold at a fairly aggressive pace. And that's not just China. There's India in there as well. And if you have a look at further afield, you'll see that there's other central banks that are doing it too. But if we just stick with BRICS Plus, imagine a world where you have a digital currency backed by oil and gold as a means to offer something different to the dollar. Now, Donald mentioned you're not going to you're not going to overcome the dollar as a reserve currency anytime soon. It makes up something north of 80% of global trade. So, that's not going to go away anytime soon. And you'd have to run, China would have to run an enormous trade deficit in order to proliferate all that currency across the globe in order to get that, in order to achieve that. So I don't think that's likely or possible, at least for another decade. But are there steps moving in that general direction? And my answer would be yes, there are. And so this is a process. So, when we're talking about these different epochs, which I mentioned up front, we were talking about the US's climb and then its shift back down again. We may have just passed the apex. We may have just passed that point in time where the US has reached its peak and is gradually starting to slip back down again. And it's just ironic that it would have to come at a time when they elect a president that's trying to accomplish the exact opposite. But it's just the case that the policies that he's implementing might very well be the catalyst that get that ball rolling and get the momentum building as well.
Donald, you seem like you wanted to add there something.
Well, I think that's an interesting point. But regarding BRICS, BRICS is a very unusual grouping. It sort of does a lot more on paper than it does in reality. In fact, it has nothing on paper, but it does more in their meetings. And a lot of their meetings are just focused on whining about the West. So there's a substantial part of just a lot of very unhappy people in a room. BRICS struggles to cohere in any meaningful way. So, China's idea of BRICS, I was told by a senior Chinese official who said to me, BRICS is really just China externalizing their foreign policy to the rest of the world. They're using their power to try to bring together other countries who can support their agenda. But the reality is there's nothing to BRICS. They get together, but they don't get along with each other. Most of the countries, try putting China and India in a room for anything more than a few minutes, and there's tension. So it's not clear to me that BRICS, as a body, certainly as it is constituted now, ends up doing much. Having said that, the soft power which the US exerted, which really allowed them an enormous amount of economic impact at very low cost, is rapidly diminishing globally. So in 100 days, I would argue Trump has done more to reduce US influence globally than almost anything else I can think of since the Second World War. So the structures the US put in place, which have tremendously benefited the US, are now being dismantled. And the US as an isolated autarky does not function well. That no longer remains the powerhouse it is at the moment. And so, I think the US becomes weaker globally. What replaces the US? I'm not sure. We're going to have to see. China certainly sees itself in that role. But that, again, is not clear that China easily fulfills that role. So, China's ability to exert the same kind of soft power, I think, is far more limited than the US, simply because most people don't want to live in a world that looks like a big China with no freedoms, etc. So I think, I don't know what happens with this, but the idea of the US remaining as dominant as they were, I think, has been dramatically diminished by their erratic behavior over the last while.
And we talk about this erratic behavior through trade tariffs and all of that, but there's one silent thing at the bottom that perhaps, I don't know, maybe I don't see enough attention being spent on it, but it's just to state, and it's going to sound obvious, but the US fiscal position with regards to their debt levels and, revenue streams and where it's finding itself. And I'm always wondering, and it's almost like a question that no one wants to ask, so I'm going to ask it. But George, you have insights, and I think you will be able to answer this, but is the US able to default on some of its debt, because what we're seeing is US Treasury yields rise. We know that some of the debt rollover is coming up, actually an enormous chunk, when the country's debt levels is already overstayed and at record levels. I mean, this to me looks like a very possible risk.
Look, technically speaking, if they run into their debt ceilings and whatnot, they technically can default. In reality, I can't see that happening. Again, for the simple reason that, as one of the Fed members said a few years ago, it's our dollar, it's your problem. They can print up the dollar, they can bail themselves out, and the effects of printing up a currency, take an extreme case like a Zimbabwe or an Argentina or something like that, where you print up your currency and it stays within the borders of that country, and all of a sudden results in a huge hyperinflation spike. That doesn't happen with the US, because it just dissipates that effect and pressure throughout the globe. And that's essentially one of the reasons why it has this exorbitant privilege that we refer to all the time. So I don't think that talking about defaults in the US is particularly useful, because I just don't see it happening anytime soon. But that doesn't mean to say that if they want to promote their hegemony, that they shouldn't be focused on trying to make themselves more sustainable over a long period of time. And to do that, you really, it helps a great deal if you have a sustainable fiscal position. Now, there's no question in my mind that, and this isn't just a US theme, this is a theme that you will see across many countries in the world. Governments have become too big as a burden on their tax base, on their relative tax bases. The social spending that has crept up and that sits as an overhead on many of these governments' books has become so large that it's become increasingly difficult for aging populations in some developed economies to be able to sustain. And it's a problem. And so I don't really have a problem with the idea of shrinking government spending and trying to find more efficient ways of doing things, et cetera, et cetera. One could argue that there are more sensitive ways of doing it than the way that the Trump administration's gone about it. But the head is in the right space, in the sense that you do need to try and live within your means to the extent that you can. The more you do, the more you stand out as a country that people can rely on longer term, or at least investing in their debt is something that you can rely on longer term, and that sort of promotes your role and position in global financial markets. So in the case of America, you need to look at the place a little differently to the way that you might look at a smaller country like South Africa, for example. Here, the fiscal sins that we continuously commit get us into trouble, and it gets us into trouble pretty damn quickly. So with us, we don't have the luxury of the dollar, so we've got to pull ourselves together a lot more quickly than they do. As it is, I think we're pushing the limits. The US can continue down this road, but it's not a good idea long term. And so they're trying to fix that. And it's going to be very interesting to see how and if they get any fiscal consolidation right. I don't think they're going to generate much in the way of revenue from the tariffs. There's all sorts of pushback that's going to happen, and Donald would be better placed to answer this question, but there's probably going to be trade away from the US. There's going to be ways of funneling goods and services through lower tariff countries. There's going to be all sorts of loopholes that they're trying to exploit, perhaps just isolate their production plants outside the country so that they don't have to put up with retaliatory tariffs, et cetera, et cetera. So I think the whole idea that the US business community is just going to accept higher costs of production, which ultimately they have to pass on to their own population. The idea that they're just going to tolerate that and not try and find workaround solutions to that, I think, is naive at best. So, I mean, I'd love to hear Donald's thoughts on how on what the implications would be of their push to try and raise revenues through tariffs, when we know that the tariffs themselves might destruct some of the growth dynamic and obviously eat back on itself in terms of the efforts to rebalance the fiscal books.
Yeah, so I think there are two reasons you put a tax in place. The one is to raise revenue, and the other one is to disincentivize particular behavior like the excise duties. Problem with customs duties are that they're a terrible revenue collector, because just as soon as the number gets high, people import less, and then the revenue drops. So and at very high levels, customs duties essentially collect nothing. So you can have 145% tariff on China. You'll also have no trade, but then that has far greater consequences on your economy. The US, for example, simply cannot localize everything that it is currently tariffing. It has a 4% unemployment rate. There are not enough people to work in the factories. And do we really want computer programmers stitching T-shirts or making shoes or something? Doesn't make any sense. So what they're doing from a tax perspective is a terrible strategy. And there's no country in the world that has a thriving economy and high tariffs. They just don't go together. So from that perspective, I think the theory is very poorly placed. And since the 20th century, hard for me to think of another time when taxes have gone up so much. So the effect of that is you're going to take money out of the economy. That's not good. The US economy, its GDP is heavily consumption driven. If you drive down consumption, you drive down GDP growth. So it's very hard for me to see how the US reduces its trade deficit without that coming at the cost of growth. So you could stall the US economy and you could run a surplus. I'm not sure that's a good outcome. Regarding the dollar, I mean, I think there's a deeper point that George is making, which is kind of worth noting for a minute. So the dollar, the US has this ability to effectively defer very tough political decisions on taxes, because you've got access to almost an infinite amount of very cheap debt. Everybody who sits with their dollars takes their dollars, and a substantial chunk of those go back into the US, which is seen as a safe haven to put the dollars. So the US gets their treasuries. Because of the high demand to lend the US money, the cost of that debt is lower than what it would be if it was pretty much actually any other country. I think the challenge you've now got is when you reduce that trade deficit, the mechanism you use to put your dollars into the world, which is buying stuff from the rest of the world, starts to reduce. So how do you get the dollars out there that all of us use when we're doing all sorts of things? That becomes an issue. But if the cost of that debt rises, as looks very likely to happen beyond just a blip, then suddenly that is not such an attractive option anymore. So if you look at the US doesn't settle its capital account on the debt. It just pays interest, which effectively makes the debt even cheaper than it would appear, because you never actually settle in the capital portion of that. That starts to shift a little bit if people don't want to lend you money and that interest rate begins rising. That's a far harder problem, I would argue, for the US to solve. And I think it's so this persistent trade deficit, I don't think is a problem. The budget deficit, I think, is a far, far bigger problem. And I think you're exacerbating that problem through the actions the US is busy taking at the moment. So you're going to make it harder, keep raising the cheap capital. Now, Trump wants to cut taxes. That would assume that if you cut the taxes, you would increase investment and you'd collect more money in income tax, even though the rate is lower. But that makes an assumption that you're actually going to drive up investment with this. And again, it's not clear how that will happen. So, for example, if you say, well, you're not going to pay a tariff if you make your widget in the US, and you will pay a big tariff if you make it elsewhere. But then you put the tariff in and then you take it away, and you put it in and you take it away. That is not a great incentive to invest. The other problem is the US has become, to my mind at least, a post-industrial economy, and they haven't done badly with that. They're a service economy. Their services are driving productivity all over the world. If you think for a minute, whether it be Netflix or Google or all of the AI tools that are kind of originating out of the US, these are the big exports. This is worth a lot more than stitching T-shirts in a factory. So what are you trying to bring back into the US? It's not clear. What you are going to do is reduce the trade. I don't see the investment rising in proportion to that. And even if it were to happen, and I think it will for at least some sectors, it's going to take years. So if you want to build more cars in the US, a car factory takes years to be set up. This is not something that simply happens overnight. You've got to develop whole new supply chains. And now you've got to kind of copy paste that across every sector you can think of. So maybe the US says, you know what, we want to bring more of the high-tech industry into the US, which is kind of what the CHIPS Act did. Trump has said, this is a terrible act. We must get rid of it. I'm not sure it's particularly worked, but nevertheless, they were subsidizing, and they said, this is how we get this industry to invest here. The problem you've got is with all of these interventions, in the way that both Biden and Trump have approached it, requires you to either keep subsidizing or keep the tariff up pretty much in perpetuity, because for certain products, the US will just never be a naturally competitive producer. Yeah. So if you were to set up your T-shirt factory in the US, your market is going to be the US. The minute your T-shirt leaves the US, you're running against Bangladesh and you don't sell any T-shirts. And inside the US, those T-shirts become very expensive, so people will buy fewer T-shirts. And again, this talks to, you can localize, but then you slow down the economy. So, the US is competitive in certain areas, but there's a trade-off. To be competitive in those areas, it has to give up certain of the other areas, which is kind of going back to David Ricardo's comparative advantage. The problem here is the US now wants to bring kind of all of that back. And you just simply can't do that in any country. So the US is never going to be as competitive a T-shirt producer as Bangladesh is. Let Bangladesh make the T-shirts and export Google or insert whatever other service would be my view. That was a very long-winded answer, and I think I lost the plot of it.
No, you gave me a lot of thought there. George, you wanted to respond?
Yeah, no, I just actually wanted to add on to what Donald was talking about, because it is an important point. You take shipping, for example. China produces roughly 50% of the world's ships.
Yes.
It is a big shipping manufacturer. The US, if my memory serves me correctly, produces something like 0.3% of the world's ships. So they are a very expensive shipbuilder. Now he's imposing taxes, for example, on any ships that want to dock in the US and give them a $1.5 million a fee every time they dock a ship that's not US made at a US port. And he thinks that that's going to encourage shipbuilding. But like I can tell you right now that not the machinery, not the shipyards, not the capital exists within that sector in the US to be able to compete with China in building ships. So it's a non-starter. As it is, I think that is just not going to fly. And so, that's just one indication. If you also think that the Chinese are just going to sit back and accept something like that without making it even tougher, raising the bar, in other words, in things like efficiencies, etc., on what it costs to build a ship, you're wrong. You would be mistaken. They will definitely do that. But then there are other cross currents that take place. And there was this whole notion, and we heard Trump talking about drill, baby, drill, and shifting away from green energy and going that route. And so immediately what you get is a whole bunch of oil-producing countries and OPEC coming out saying, no, they're going to increase production into what looks like a global slowdown. And lo and behold, the price drops. Now, guess what? You push that price a little bit further, and drill, baby, drill doesn't sound particularly attractive to any driller in America. So OPEC is not going to just sit back and just watch Trump open up more and more oil drills because they know that over time that's going to count against them. So they'll play the long game. They know that he's only in for another 3.5 years, roughly. So at the end of the day, they've got to ride out 3.5 years. So if they keep oil prices a little more subdued over that time and prevent the oil sector in the US from growing a lot bigger than it is right now, for the 10 years that follow, they're going to be smiling. They're going to be very happy with that. So they're going to be putting, and this is the point that I was trying to make a little bit earlier. If you think that the world is just going to sit back and accept these tariffs and not make any other plans, you'd be mistaken. There's a lot of strategic thinking that's going on in the background that's going to completely undermine a lot of these so-called Trump efforts. And what I fear for America is going to happen is that they will have undermined their economy to such a degree that it's going to take some time for them to recover post-Trump. So we get the destruction, which accelerates the turnaround in the epoch. So we go from peak down the slope, and Trump accelerates that a little bit. And for that to stop is going to take quite some effort. But again, just to also highlight the point that Donald made, is that it's a natural evolution to move from industrialization to services. Services require an increasingly elevated skill set. And that's what the US was producing through all of its very fancy universities, Silicon Valley, all of that good stuff. That is where they were focused on, and that's where they succeeded and influenced a lot of the world that way. And it just seems to me like they are wanting to almost regress to a point where they become more industrial in their approach, which to some degree I can understand the very simplistic thinking is, well, if you produce more and you sell more to the rest of the world, you'll shrink your trade deficit. There's very little attention that's paid to some of the dynamics that actually drive a trade deficit, and that's just a case of monetary policy being particularly loose for too long, and that happened ever since they abandoned the gold standard. And that goes back to the 1970s, and there's very clear evidence to suggest that played a significant role in driving this trade deficit. Why? Well, because they could, because money was cheap, and because consumerism was boosted, and because they shifted to a services economy. And so the structure and the nature of the US economy is fundamentally different to what it was. And harking back to the days pre that seems a little bit far-fetched and unlikely, to be quite blunt. But it's obviously not going to be a straight line thing. And so watch the space. And I keep telling people, sometimes when you want to renovate a house, the first thing you do is you break it down in the hope that what you're going to build back up is going to look better and be newer and work better and, look fancy, etc. That's kind of the way I'm looking at this whole Trump thing. He's the one that's bashing everything down and stripping everything and etc. And the rest of the world is going to piece it back up in a way that ultimately, in my opinion, might very well end up being better for the rest of the globe for a long time to come. So, I don't, perhaps that's me wanting to leave this discussion with a silver lining on what's otherwise a heavy cloud. But, if we think about it in those terms and understand that other countries around the world are going to perhaps trade away from the US, adopt strategies that don't include the US in the way that they did, reduce their dependency on the US, become more self-sufficient. There's a lot to be said that's good about that. Whether or not we fully align with the likes of China is a different debate, I guess. But anyway, I'll park that for now.
Donald, do you have silver linings to share?
Yeah, so I agree with everything George said. I think we should remember that a lot of the US's strength came through its alliances. So, you mentioned the shipbuilding, but, countries like South Korea they're not as big as China, but I mean, they're considerably bigger and better shipbuilders than the US is, for example. The idea was always that you could share this load between a group of allies. So you look at the groups like AUKUS and the Quad, etc., where you're sharing according to your competitive or comparative advantages. You're also saying, what was going to be the Trans-Pacific Partnership, which was this agreement that was designed, in fact, to isolate China, and Trump got rid of that in his first term. The problem now is that because these alliances have weakened, the US finds themselves with the only option really being a very aggressive approach to the rest of the world. So, and all of this, of course, has potential to spill over into more than a trade war, but, something even hotter than that. I think on the positive side, which is not as big as the negative, I must be honest, but on the positive side, I think countries they have now been forced to reassess their alliances. I've been privy to a couple of conversations where South Africa, who was kind of dead set against any further trade agreements, has said, well, you know what, we need to maybe dust these off, and we need to see what we can now do with South American countries and a host of others. There's a real understanding that we have to de-risk. And that is there with all sorts of countries around the world. So I think, for the US, this is not good, but I think for the rest of us, it is good to have a more diversified group of trading partners that we work with, so that the erratic and irrational behavior of one person doesn't have such dire consequences. So, yeah, I think that is the very tiny upside I see, Ilse Marie.
Especially, when we can diversify away from a partner that's acting like the big brother, and when you don't vote in line with their security concerns, you pay a deep price. And I think that's what we're seeing. Gentlemen, I'm very happy to call it. Like George mentioned, Trump is renovating the whole global order and system. And what we're going to be left with, who knows? Who knows what we might wake up to. But thank you very much. And I'm sure we will chat again soon.
All right. Thank you. Take care. Bye-bye.
Thanks, guys.